Everybody. Aren't you curious what all the headlines mean? New York real estate down 30%, sales are down 50%, but we know better not to listen to national news. That's why you dialed in to listen to the San Diego real estate market update, June 20th. I'm Lenska Realty, and I also serve on the board of SDCIA, which is the largest investor club in Southern California. So check it out and join us at one of our meetings. And if you like to work with a real estate broker that has your back and understands the investor set mind, please give me a chance or dial into one of my educational events. So, recessions versus reopening. All right, we have gone through some tremendous turmoil this year with the whole COVID-19, unprecedented government mandatory economy shutdown, followed by protests, riots, and looting. So nobody knows what the second half will bring. But I'm going to bring you a great market update that will give you some inside view. Thankfully, real estate, housing, and construction was declared essential in California. So it's up to the buyer and seller now to see how they will continue to engage in the buying process. And I will show you the graphs and stats and numbers as always. Since I am not an economist, I'm just your local realist. And please don't forget to subscribe or give it some thumbs. So how do we know a market is a good market, a seller's or buyer's market? We're looking at these real estate data points: sales and inventory numbers, interest rates, employment data, HPSI by Fannie Mae, homebuilder sentiment, affordability, and foreclosures and forbearance. So we'll dive right into the sales and inventory numbers. The daily activity going on, like for example, how many new listings we have, how many were expired. So in the beginning, we have seen a few more expired. So 73 is a pretty high numbers because sellers have been taking their properties off the market. Also, we can see how many price changes we have, solds and pending. So usually, like we have seen it in the past, we have a pretty balance between the new listings and the pending listings and also the sold listings. So these are kind of various days. Usually we run around 300,000 or 400 listings per day. All right, so we can see that even in June we were still down by 40%. But we have still very strong May numbers. The median home price is at $590,000 and up 2.6% year over year. The median home price detached is at $670,000, up 2.3%, where the median price is $435,000 and only up 1.2% year over year. So we have seen the average to be in the last few years about 6 to 8, even 9%, because we're talking about the spring-summer selling season. Because I may remind you that the money is made in the first 6 months of real estate. This year it might look different, but so you can actually say that the appreciation is down. But the homes are still selling very fast, 24 days on market. A huge recovery is the pending sales. We're only down 8.3% year over year, but we're doing much better compared to April, where we were down 42%. So the down 42% translated in sold listings down 50%. So we also see the difference means that many listings maybe fell out. So the price per square foot is still at 421, which is pretty strong. And we're going to take a look at the active listings for attached and detached. And I skipped the detached. So for the detached units, we're also seen a little increase from 1,800 to about 2,360 in May. Still, compared to all the other years where we were at least at 3,400 or just below the 3,500 mark. So meaning the inventory is very tight. So looking at the average sales price throughout the weeks, because obviously we were looking at week by week and see if we can see if the real estate prices are going down. So in the very beginning, we didn't in April, you know, it was holding up pretty steady. Actually, it increased in 1 week and then we came down a little bit. So currently, we the first beginning of May, we were at 630. So these were probably the closings that were still going on in March. So, but then we did see that drop in May, the last couple of weeks in May at about 600,000, and we ended the month of May at 590,000. So a slight decrease. But the good news was we still were in about 98% closing price of list price, which again, a small little decline month over month. This showed you guys some price pressure because, you know, all of this is called Southern California number, like about 54% of the listings had a price reduction. So looking and see how attached and detached sold, just as this is a visual kind to see how, you know, nearly half of the units practically sold year over year. But interestingly enough, the investors are still out there, or, you know, people that have cash available. We just dropped, you know, 1% compared to last May 2019. And I was also curious, what do the manufactured homes and the 2 to 4 units do? So in manufactured homes, we also saw a 50% decline in the units sold, but the stronger part was the 2 to 4 units, and I assume good cash flow. It probably was harder to sell actually with tenants in place. So we have seen just only the units going from 62 to about 40. So it's about, you know, a little 20 to 30% down. And more price pressures coming from the price from the big gap in consumer expectations. Obviously, the buyers are saying, hey, you know, I should be getting a deal, you know. But then sellers saying, you know, they were holding pretty strong, as you guys can tell, and only 30 to 29% in the end of May were doing a price reduction to attract maybe some more buyers. So practically what all this says is we're just either close to a 2-month supply, and as we all know, a seller or a balanced market is about 6 months supply. And looking at where we are operating, we've been operating since 2014 in that low inventory number, hovering, you know, around the 2 and 2.5 months of inventory. So all this is, you know, supply and demand, and as we have even less supply and maybe even a less demand, but in San Diego housing market, it balances it all out. Now, obviously, less supply means also, you know, we all are striving and want to have a higher homeownership rate. And since we're comparing this crisis all to to 1930s, I was just curious, what is the home ownership rate in 1930s? So it was about 46%, and actually California brought it all the way up to nearly 57%. How does San Diego fare? So we have been coming down, and as we know, I feel like every other home is a rental property. And currently we're at 57%, and for the first quarter we're doing a little reversal. But mortgage rates are prepping up the market. We're still currently very low. The 30-year fixed conforming is about 3.25%, and the VA is around 3%. I have seen it now dip under 3%. You know, depends on which loan broker you're talking to. But the bad news is for the self-employed, Fannie Mae just came out with some new guidelines and saying that that for self-employed, that there is a squeak of a doubt in the underwriter's mind whether a business has recovered from the crisis, they could deny or approve the loan. So also for all loans in process, it means the same thing. And so maybe if you have an escrow going where the buyer is a self-employed, they might require an audited profit and loss statement, and so they're going to have to jump through some more hoops. Here we have a little bit of a V-shaped recovery because purchase applications compared to same week last year actually went up 18%, and which is also up 6% from a week ago. And so, and that gives us two back-to-back weeks of positive year-over-year prints for purchase applications. So that is telling you there are more buyers in the pipeline. Are you guys ready for the employment data? A graph is worth 40 million jobs. Just as a reminder, unemployment reached 25% during the Great Depression, and currently national unemployment is estimated about 25%, considering the people that fell off and plus the self-employed and gig workers that also could file for unemployment. So the good news was, in contrast to the expectations that the job market would further deteriorate, the May employment report suggests an improvement, and that kind of the economy turned a corner. So after a few states have been reopening and rehiring, and that reversed, hopefully, it got us 2.5 million jobs. And the stock market liked it too, because stock market only cares about which direction the change is, and that's all that matters to them. So the bad news is SANDAC, that is specific here to San Diego, reports a 25% unemployment for sure, as we have many workers that are in the high-risk jobless categories. And here, which are the industry worst affected by the COVID-19 job crisis? In the industry is the leisure and hospitality, the wholesale and retail, and education and health services, and also government workers. And certainly California has a big share in all of this, and this number is just including up to April 4th, and we had many more filing for unemployment after that. So even so, it seems like the CARES relief checks and the higher unemployment payments people have been receiving have kind of helped to stem the economic hardship, but those programs are not stimulating any discretionary spending, that's for sure. So as nobody knows about the future of the pandemic. But as we said before, a lot of people still have very good jobs, and owner occupants are reluctant to list. Inventory also has decreased, which leads to traffic to any house listed in decent condition. So we have seen multiple offers here in San Diego. And a few buyers have gotten cabin fever and realized their house is too small. That's what I was hoped and also mentioned like 2 months ago. And not only that, we actually have seen an interest in people buying a second home, believe it or not. So, but a lot of buyers and sellers are in the holding pattern to see what happens. And if you didn't have to sell or list your house, you probably didn't want anybody traipsing through and taking on the risk of getting infected. So we have people and buyers on the sidelines, and also, as we know earlier, we mentioned that the COVID crisis, more buyers think they can find a deal out there. So strong demand, unemployment or not, and my question to you is, does the California median home price is affected by unemployment? Not really. I just give you one tip, one line here. The unemployment went up in the 80s and home prices went up slightly. So the history and why we don't see in many cases the unemployment affecting actually the housing market. We do a deeper dive, and you can sign up on the Zoom call on my meetup group in San Diego Real Estate Profit Building. It starts June 22nd at 7 p.m. Just another remark, a lot of people comparing the current crisis to the crisis 2007 and 8, and yes, prices dropped 30, 40, 50% in less than 2 years. Also, the depression that we're comparing it to had real estate prices drop 35%, and about 40 to 50 mortgages were in default. What are the differences and what the commonalities, and also what did we learn out of the 1980s crisis? That's what we're going to look deeper into it, and the most likelihood of possibly this crisis. The good news is San Diego has a lot of good employers, and also we have a huge defense and military employer. So actually the naval base is the largest employers in VA. So, you know, 5, 6 years ago, a listing agent didn't like buyers with VA financing. Guess what? VA buyers have now the best chance of getting their offers approved and accepted because we know they don't lose their job. All right, but we also have the education party in the San Diego County, right? But then we have international trade, technology, and life sciences, and manufacturing. So we have some very strong job prospects and a job market here in San Diego. And to finish up, all the high employment payments and some of the foreclosure forbearance money, I assume, is going into saving money. Does that mean people are saving for a down payment, or is this dry powder for future spending or precautionary savings? Let's take a look at the Home Purchase Sentiment Index by Fannie Mae. That index is a composite index designed to track consumers' housing-related attitudes, intentions, and perceptions using 6 questions. The 6 questions are: is it a good time to buy or sell? Will home prices or mortgage rates go up and down? And how confident do people feel with their job and their income? So thanks to a good time to buy or sell reverse course in the free fall of the last 3 months, the index is up 4.5% to 67.5 in May, and that is compared to, obviously that was a good time for us investors because deals were to be had. And if we go back, we knew that in 2011 or 12 the median home price was half of what it is now. So we're at 67%, and people believe interest rates will go down and home prices. But as we noticed, people were still out there, so the buying condition months over months were actually up 11%, year over year still down, but the selling conditions were up months over months, but still 73 points down from a year ago. People also say prices are going to go down and mortgage rates are going to go down, and every other person is concerned about the job loss. That is no surprise, but the result for the net share of those who say their household income is significantly higher than it was 12 months ago practically remained unchanged. So what are the reasons why people think it's a bad time to sell? So here we are, unfavorable economic conditions. Last month we were at 47%. Now that reason was nearly half of people said that is the reason, where the other indicators kind of went down. Also, less said that we had unfavorable mortgage rate. So all the other reasons, difficult for buyers to qualify, was not so much a reason, or low home prices. So how did the home builders feel about so here we saw the index up and about 4 or 5 points in May. Current level went to 37, but they said they felt good about the houses they put into escrow. Also, they feel good that the traffic is up enough so that the positive sales will continue, as they always, and I'm not sure how they measure now the online traffic, because I'm sure the site on-site traffic is probably down, which also obviously contributes that the housing starts plummeted to a 5-year low in April, as builders practically paused their activity during the COVID-19 pandemic. Starts on both multifamily and single family dropped about 30%, the biggest monthly decline in 6 decades of records, to a seasonally adjusted annual rate of 891,000 in April, the lowest level since February 2015. That was reported. But you guys can see that, you know, multifamily is kind of still leading the building permits. And remember, in some states, home building was essential, and in some states it wasn't. So, but just as for the future outlook, every time a home builder pauses construction, it will delay the inventory. And again, the same old story, there will not be enough inventory. How are we comparing here in San Diego? Practically the same story, and in the beginning of year, definitely there was a little bit of an uptick, but we're still below the minimum what we need to build in order to keep up with demand. Also, multifamily permits and construction starts. So they started construction. All this inventory will be ready to be moved into in the next few months or this year. Now we're taking a look at the investors and how they fare with collecting rents with their tenants, because another fear is that investors will lose their houses because tenants are not paying their bills. So in apartment rents, in the larger apartments, they said they collected in May about 80%, and June was very positive too. I will probably have on my Zoom call an updated slide on the June. Now take a look at the do-it-yourself landlord type landlord. Avail is one of those websites where people, smaller investors, get help and can manage their properties through. And so they have about 37% own 1 unit, and 34% own 2 to 4 units, and 5 to 10 units 14%. So that's practically makes up your, what we call your mom and pop investors. And that in contrast, the landlords who own just 1 unit have seen fewer partial payments. In March, just 11% of landlords in this cohort did not receive full rent. This number increased 19% in April and 26% in May. And two, so you see here how, you know, how they received the rent payments, 100%. So only 78% in March. It went down to 67% in April and 58% in May. So what were the reasons? And they said 60% reported because obviously the tenants didn't or can't pay in full. Another 14% said that actually the units are vacant, and 10% of the tenants, they offered them a discount or even a rent deferment. So my local boots on the ground, I called a couple of property managers, and here in San Diego, they actually told me that they have collected practically above 90% of the rent, so which makes me believe maybe it is more smarter right now to have your properties managed by a professional management companies who's familiar with also the help tenants can get and the Unemployment and CARES Act and the various things you can get so you can pay your rent. Last but not least, we're going to take a look at foreclosures and forbearances. The good news is if you have an FHA mortgage and you need a forbearance and you are eligible for the COVID-19 standalone partial claim. So partial claim is no interest junior loan secured by your is a no interest junior loan secured by your property. So no payments are due on the COVID-19 standalone partial claim unit until it's paid off, the maturity or acceleration of your insured mortgage, including for the sale of the property or refinancing or the termination of FHA insurance on your mortgage. So you don't have to come up with a lump sum after 6 months or 12 months. So that's another good option. And we have some good news on the forbearance numbers. We have total 9% of mortgages are in forbearance, but the curve is flattening. Just to give you an idea that we have now an increase of about 7,000, where we had in comparison 325,000 net increase in the first week of May and 1.4 million in the first week of April. So will all those forbearances result in foreclosures? Probably not. There was probably some borrowers that just wanted to improve their personal liquidity, and also only 1 out of 10 of those are underwater, and the other ones are sitting on a nice chunk of equity, and if they have to, they can still sell it, and houses are not being foreclosed on as they don't want to walk away from the equity. Some footnotes, we do see an increase in delinquency in the large cities of Miami, Florida, Las Vegas, and New York, and increased delinquency we see in the states of Nevada, New Jersey, and New York. But the foreclosure numbers plummet in April thanks to the foreclosure moratoriums in place due to the COVID-19 pandemic. But again, the younger generation, those are the ones you see demonstrating, are the younger ones that have not attained a college degrees will be harder hit in attaining home ownership. But overall, so in conclusion, the San Diego housing market holds strong while buyers are house hunting with little choices while COVID-19 hangover rules. Plus, the virus remains the wild card, possibly second wave. We also have a wild card with the elections coming up, and the uncertainty of the economy certainly puts a challenge into the market, and how will our new normal look like? But getting ready to possibly pick up some deals, and how do you recognize a deal? Join us every third Saturday of each month, which means June 20th, learn how to evaluate, analyze real estate investment deals for maximum profit. Or join us for sitting at home in front of your computer, Zoom call, Rethink Real Estate Investing. Like I mentioned before, we take a history, going down history lane to see which crisis is most similar to what we're experiencing now. June 22nd, 7 p.m. Thank you for listening. Don't forget to subscribe and give me thumbs up, or if you in need of any help in any real estate transactions. Stay healthy and wealthy.